Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into Cellectar Biosciences' proxy statement. It's a document about an upcoming shareholder meeting, but trust me, there's more than just meeting minutes hidden inside. We're talking potential stock splits, executive pay, and a peek behind the curtain of this biotech company. So what's on the agenda for this meeting? Well, first off, they're going to elect some directors to the board, the people in charge of steering the ship. Then they're asking shareholders to say yes to keeping their current accounting firm. But the big one is a proposal to allow Cellectar to do a reverse stock split. Think of it like smashing several small slices of pizza into one big slice. It doesn't change the amount of pizza you have, just how it's sliced. Finally, they'll have a vote on executive compensation, how much the top dogs get paid, and whether they need to ask to delay the meeting. Now, why should you care about all this? Because these decisions can directly affect the value of your investment. A reverse stock split, for example, can be a sign that a company is struggling to keep its stock price up. The board is recommending you vote for everything. That is pretty standard, but let's dig in and see what all of this means. First up, the election of directors. They've nominated James Caruso, who is currently the president and CEO, and Frederick Driscoll, a financial expert with experience at several biotech companies. It's almost certain they will win as the board recommends them, but good to know who they are. Scroll, retentions of appointment of our conscience, B. Drudge Public Accounting Firm Scroll SEER. Next, they want you to approve their choice of Deloitte & Touche as their accounting firm. This is pretty standard stuff and it's unlikely to cause any waves. What's interesting though is that they switched from Baker Tilly to Deloitte during the year, and it happened because of some accounting errors. This is not a big deal, but it does seem to be a pretty expensive change. Deloitte's audit fees were about $1.9 million, way more than Baker Tilly's fees the year before SAP. This usually means they found something important that needed looking into. It's also worth noting that all these services were pre-approved by the audit committee, meaning they were on top of it. Now on to the reverse stock split. This is where things get interesting. They're asking for the option to combine shares at a ratio between 1-for-10 and 1-for-30. This means that if you own, say, 30 shares, they might turn into just one share. Why would they do this? Primarily to boost the stock price to stay listed on the Nasdaq. Nasdaq has a minimum bid price requirement, and Cellectar needs to get its stock above $1 to avoid being kicked off the exchange. There are risks, of course. Reverse splits can sometimes signal trouble, and there's no guarantee it will actually raise the stock price. It may make trading less active as well. If the reverse split happens, it'll affect stock options and warrants too. For example, if they do a 1-for-10 split, an option to buy 100 shares at $1 each would become an option to buy 10 shares at $10 each. There could also be tax implications, so it's a good idea to talk to a tax advisor about this. The board recommends voting for the reverse stock split. It's needed so they stay on Nasdaq. Finally, there's an advisory vote on executive compensation, pay packages, how much they get paid. This vote is non-binding, meaning the company doesn't have to follow your advice, but it's a chance to voice your opinion on whether you think the executives are being paid fairly. In 2024, CEO James Caruso's total compensation was about $3 million. Looking back to the table, the non-CEO executive officer compensation averages to a bit over $1.5 million. Something to note is if Caruso gets fired without a good reason, he would be entitled to severance in an amount equal to 24 months of base salary plus applicable bonus and health insurance. This table tries to help compare executive compensation with the company's performance. The CEO's pay in 2024 was about $3 million once you factor in stock options that may or may not materialize. Net income was negative. Keep in mind though that Cellectar is a biotech company and the big swings in pay are typically tied to hitting certain milestones. There's a policy in place that stops executives from gambling with the company's stock, which is good. They also consider diversity when picking candidates to be director, which is very standard nowadays. If you have something to say to the board, you can send it to their New Jersey offices. R2 Scroll security ownership of certain beneficial owners are to management. Scroll, the biggest shareholders are investment funds like Rosalind, Advise, and IDAR One Partners. CEO Caruso owns a smaller piece of the pie. The Compensation Committee believes all their policies are designed to not encourage excessive risk-taking as it should be. Unsurprisingly, the board recommends that you vote for the approval of the compensation of the executives. Now, let's take a look at the big picture here. Cellectar is at a critical juncture trying to keep its stock price afloat while developing potentially life-saving treatments. The reverse stock split is a risky move, but it might be necessary to stay on the Nasdaq. Executive compensation seems high, but it's tied to performance milestones, so there's some alignment with shareholder interests. One thing that's not a good sign is that they had to change audit companies during the year and pay almost 4 times more because of it. The company is betting on a new drug to turn things around, and there are plenty of risks along the way. Overall, this proxy statement paints a picture of a company facing challenges, but taking action to address them. Now it's up to the shareholders to read carefully and decide how to vote. Thanks for watching. If you found this helpful, please like, subscribe, and leave a comment below. What do you think of Cellectar's plans? Are you in favor of the reverse stock split? Let me know in the comments.